Hello viewers, in this video I'll be going over natural gas, ETF ticker symbol, UNG. Today we are down 1% and we have about 2 hours left in trading. On the 1 hour chart we do see the MACD is starting to converge and hit positive MACD at the moment. And on the 4 hour chart we start to see a conflicting signal that the MACD is pointing down. So we have also the 9 moving average and 18 moving average is starting to diverge as well. So I believe we may head into sideways price action due to the 1 hour and 4 hour MACDs are conflicting with each other. But on the other hand, we have the daily MACD starting to converge last week, and we also have the 9-day moving average and 18-day moving average converging, and we have a good possibility we may break out higher on the 50-day moving average. We may see that price action this time this week, so that is at the price of $19.50. And as for support, if we do fail to break above it and continue on down, I see a support around the price of $18.50. Reason why, we have price concentration or floor back here and price concentration late July and early August. So overall I do see possibility of sideways price action. So let's head to the forecast model. So on here I'll go day by day where natural gas will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecasts we should focus on? Well, we want to look at the trend that closely resembles to the current trend. So we have the current trend right here, and the trend in question that I believe is the best match or best fit is the May 25th, 2017 to August 21st, 2017. I believe this is the best match. So let's review the current trend first. So what we have in the beginning of the trend, we started in a downtrend. We started off in the middle Bollinger Band, and then we proceeded to head in downtrend. We made a quick reversal. We have one peak here, and then we touched the bottom Bollinger Band right here. And next we see another peak or attempt to make higher price action, but failed. And then we head lower as well, and then we proceeded to revert to the mean right towards the end right here. So we have that price action, and let's see the trend in question. We started out of the middle Bollinger Band, and then we proceeded in a downtrend. We see a peak here in price right here, and let's just draw all the peaks first. We have a peak there. In between those peaks we see a dip or a touch on the bottom Bollinger Band, and then once more towards the end right here, and then finally we have reversion to the mean, identical to what we see in the current trend. So what we have is 1 2 3 4 5 6 7 1 2 3 4 5 6 points, and 1 2 3 4 5 6 points that are similar and identical. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So again, the trend that we just examined was May 25th, 2017 to August 21st, 2017, and it looks like natural gas back then fell around 1.8%. So expect to see price action to be sideways, slightly down. And that is all. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.